We've got Bitcoin on an absolute tear in 2024, and for this reason, I felt I just couldn't not make a video on this Purpose Bitcoin Yield ETF. It trades under the ticker BTCY, and this, I've been generally, critical of covered call funds over, the duration of my investing career. I cannot in good faith think of a single person that should be buying this Purpose Bitcoin Yield ETF. And I'm going to go over why in this video. I'm going to go over some very misleading comments on the website of this fund. I'm going to show you the returns. I'm going to show you pretty much the downsides of this fund and the fact that there has been very little upside. And again, when I speak on upside, I'm speaking on upside in relation to a benchmark. I understand that this fund is up money in 2024, and a lot of people might be happy with it being up money in 2024, but the risk they are taking and the overall upside they are sacrificing in relation to the benchmark, in relation to Bitcoin itself, which is what you should be comparing this fund to, the returns of Bitcoin. It has not been worth it, and I'm going to get into why. So let's dive right into it. So everybody, as always, 3 free stock picks in the description below from our premium platform. They are absolutely free. It's a great detailed report on some of the top opportunities I see in 2024. So just head down to the description and sign up for that. I know I'm not going to convince covered call investors that this fund is suboptimal. I mean, some of you have your beliefs and whatever, choose to invest, however you want. I really don't care what you buy, but I've been making these types of videos primarily for the people who are still looking at being educated as to the overall benefits, the overall downfalls of these funds themselves. And that's who they're mainly directed towards. So if you don't agree with me, comment down below, let me know. I still don't mind engaging in conversations. But overall, my main goal here is to educate investors as to the overall benefits, the overall downfalls of these funds, and I can't see many benefits when it comes to this one. So these crypto yield ETFs, I think we have an Ethereum one too that's performing just as bad. I mean, they started out in, 2021 when crypto, it was very popular, and ultimately the passive income craze, the dividend craze, all that type of stuff, that was still very popular as well. I mean, you can go to Google Trends and look up passive income. It absolutely skyrocketed in 2021. So of course these fund managers are going to create funds in an attempt to generate yield from an asset that is not meant to generate yield. This is a highly volatile cryptocurrency. It's going to go through massive upswings and massive downswings, and ultimately selling covered calls on an asset like Bitcoin has to be one of the most absurd things I've ever heard of. And one of the things I want to get into with this fund is we can go to their website here and they talk about, covered calls in cryptocurrency, the potential value we see. However, if we head to the commentary on downside, so Purpose states, from the perspective of buyers, options can be thought of as leveraged products providing exposure to an asset by simply paying a premium that is far less than the price of the asset itself. This makes options a useful tool for speculative trades. Conversely, options can also be used to hedge and limit downside exposure to protect a portfolio. From a writer's perspective, options can be a steady source of income if structured properly from an asset by selling the right for the counterparty to buy or sell the asset. This is where Purpose Bitcoin Yield ETF and Purpose Ether Yield ETF come into play. Both funds are structured to sell call options on Bitcoin and Ethereum to be a steady source of income while being long on the cryptocurrencies. So I've had so many investors, covered call investors, come to me and point out this portion. The conversely, options can be used to hedge and limit downside. They are talking about purchasing options. They're not talking about writing options. When they swap to a writer's perspective, they never mention any sort of downside protection. All they do is mention that it can be a steady source of income. As we can see throughout this video, the writing of options on Bitcoin has resulted in zero volatility reduction, zero downside protection, and just the only thing you've done thus far is assume the exact same amount of risk and realized less returns. And, people who normally would not buy Bitcoin, people who, normally would not have any sort of exposure to this type of volatile asset, now that they see the yield and now that they see the, fact that it could potentially hedge you in terms of downside exposure, they're interested in it now. This is BTCY versus the price of Bitcoin since the fund started. So the fund started in December 2021. Obviously, that left it in a bad spot because crypto drew down quite a bit from that point in time. However, downside protection. When you look at this chart, there has been absolutely no downside protection. So this is a huge drawdown in Bitcoin. Bitcoin lost 70.5% and BTCY lost 69.17%. When you're thinking of downside protection on a volatile asset, are you really thinking about 1.3% over a 70% drawdown? I mean, to me, this is effectively zero downside protection. If somebody invested $10,000 in this fund, they're sitting there with $3,000 versus $2,950. That is effectively zero downside protection. This fund has provided next to nothing. Now, the real negative towards BTCY is the fact that not only has this fund provided next to no downside protection, it is now getting absolutely thrashed in the run-up in Bitcoin. And if we look to the total returns here since the fund's inception, we can see that Bitcoin itself, and keep in mind, this would be with distributions reinvested. You've taken your distributions from BTCY and you've reinvested them back into the fund. If you were to bought Bitcoin at the exact date that BTCY started trading, you would have returns of around 63%, which is impressive. That's outperformed the S&P 500 that has been, one of the best returns over, the last 2 or 3 years. However, if you had bought BTCY on the day it was starting to trade, you would be up 25%. You have realized less than half of the upside of the underlying asset that BTCY is based off of. No matter how much we want to do mental gymnastics here, the underlying asset you should be comparing BTCY to is Bitcoin. Now, yes, most covered call investors understand that this fund is not going to provide as strong of returns as the underlying asset. However, there has to be some give or take here. And my main issue with this fund right now is the fact that most covered call funds, you get some sort of downside buffer from the premiums collected from the options contracts. However, as I've showed you, there has been very minimal downside protection in terms of this fund. So effectively, by making a purchase in BTCY, thus far, you have said, I will take on 100% or 99.5% of the downside risk, but I will not realize all the returns. I will cap my returns all while providing next to no downside benefit. And this is pretty much, in a vacuum, basic investing principles. If we have two investments of any kind that are expected to have the exact same risk, it is almost a mistake in 100% of cases. And again, we could, isolate this out to particular tax reasons or something like that, to take the investment with lower returns. If risks are identical, it makes next to no sense, which is why, as I've mentioned, other covered call funds, I can see a benefit to them, to specific investors. I cannot see a single benefit to owning this fund. Now, a lot of people will say the yield. The yield is a fabricated yield based on the options premiums the fund sells and the fact that they're just distributing you a portion of the assets you own anyways. If we look to the net asset value of BTCY since its inception, it has lost 16% while Bitcoin has gone up 61%. This is not an effective distribution they're paying you. You would have been better just owning something like IBIT, like IBIT, which has a 25 basis point fee, and you could have just sold portions of your Bitcoin off every single month and been way better off than owning BTCY. I mean, when we look to the actual fees of this fund, they're charging you 1.1%. They're effectively charging you a ridiculously high management fee to underperform the underlying asset, which again, most covered call investors understand that. However, you're assuming 100% of the downside risk. Historically, you have assumed 100% of the downside risk, and now you're assuming half of the upside returns. Now, some of that is due to the currency hedging element of it. However, they do have a US traded one that trades in US dollars. It's up around 5% more than the currency hedged one. So you're underperforming still by nearly 50%. Overall, in my opinion, if you cannot handle the underlying volatility of a crypto like Bitcoin, you should just not own it, period. I mean, a lot of these funds are sold on a reduced volatility based on a dividend yield. However, if you believe that that dividend is somehow reducing your overall volatility, sheltering you, improving your returns, that is not how it's worked. I mean, the net asset value of this fund has been declining. You could generate the identical yield by owning Bitcoin outright and then selling assets every month, and you would actually end up being able to pay yourself more money from selling those units, and you would actually be sitting on higher returns as well. And I know everybody is going to be like, well, you know, what happens in a bear market, things like that. Look what happened during the bear market from you receiving a yield. Next to nothing. You fell the entirety of the asset. And now that the asset has started to regain value, you've given up so much returns. Like, from a actual financial mathematical standpoint, it's a borderline nightmare. You've assumed 100% of the risk and you've realized less than half of the upside. And I know people, again, they'll state that it's the yield, it's the yield, it's the yield. The yield has not done much for you. I mean, this would have been, again, this downside would have been if you had reinvested the premiums. If you have this fund in a taxable account, it's an even bigger nightmare because you have tax drag to go along with that. So you're not going to be able to reinvest 100% of your premiums back into the ETF. So your returns are even going to be worse. Overall, I mean, this is just not a fund that makes much sense at all. The one thing I can take away from this as a positive, I guess, is the fact that, nobody is buying this fund. We're looking at, if we go down to the net flows, we're looking at only around 6.69 million in inflows this year, which is, I mean, if we look to a fund like IBIT, it's had $25 billion in inflows. And a lot of this is going to be from Canadian investors, because when we look to, say, Purpose's non-currency hedge Bitcoin ETF, because they have such high fees, they're seeing outflows as well. So not a lot of people are buying this fund, but the fact that people, there's still inflows into this fund, it does make me question a lot of overall strategies when it comes to the market, when it comes to crypto. It makes me question, whether people understand how these funds actually work, and just overall, the yield it's providing. As I told you, the NAV of the fund is declining since its inception, despite Bitcoin being, up 61%. I mean, effectively, this fund it's providing no downside protection. It's providing suboptimal returns, and it's also just destroying underlying value. So I felt I would make a video on it. Let me know in the comments, drop your opinion on the fund itself. So everybody, hope you liked the video. Head down below, subscribe to the channel, like the video, drop a comment down below. And again, 3 free stock picks in the description. You can grab those, and we'll see you next time for more great Canadian content.